getting set to trade September week 1, 2021. Yeah, we're already there. September marks the final month for the third quarter of 2021 as well. And as we get into Tuesday night, August 31st, after we've traded our final day for the month of August, overnight we're going to get some data starting with this China manufacturing PMI at 9:45 Eastern. This is the more important one of the two big ones that they put out. This is the one for the smaller and privately held factories, as privately held as anything can be in China, that is. And then as we get overnight into Wednesday, we get all these different PMIs from countries around the world, all out of Europe and so forth. Then as we get to the U.S. early pre-market at 8:15 Eastern Time, we'll get the ADP report. That is the precursor to Friday's non-farm payrolls report. Yes, we're already there at the non-farm payrolls as well this Friday. And then we get our own manufacturing PMI in a double dose at 9:45 and 10 o'clock Eastern with the market and the ISM, the Institute for Supply Management, manufacturing PMI numbers at 10 o'clock. So a lot of really, really important day coming our way as we get into the end of the day Tuesday and all that stuff hitting us on Wednesday. So it seems like the market is setting up for something big to happen on Wednesday. Is it going to be is it going to be a slow grind up the rest of this week and then see some profit taking Tuesday afternoon and then wait to see what happens with the data and stuff on Wednesday, or was Friday is Friday gonna get all taken back and we're gonna start correcting these last 2 days? Let's see, and let's see where we will go if in either case. Starting off with our simplified daily chart, I've explained about a bazillion times what the blue box means. Ultimately, we are shooting towards this target of 45.64. On Friday, we rose above the plus 20% mark on the year and closed above it with our new all-time closing high and weekly all-time closing high of 45.0937. If we trade up to our target here at 45.64, I put over on the left side of the screen, this will put us at 21.5% on the year. So that is always that overshoot that we see happen at a big handle like 20%. We almost always overshoot that, and that would be a 1.5% overshoot if we got to our target of 45.64. So that just adds more, more gravitas here to getting to this target. Anyway, also a reminder, these little white arrows here, I put these on this chart last month when we got to the August non-farm payrolls report. Actually, it was the July. It's a backward-looking thing. But that's what these little white arrows are. They point to the day that the non-farm payrolls came out, so you can see how the market traded after and how the market traded leading up into it. So when you see these on this chart, that's what that means and why those are there. Here is our roadmap. If we are going to continue to grind higher, we are working our way towards this 45.64 level by way of a little pit stop between 45.25 to 45.35. Sometimes the market doesn't even look at that. Sometimes the market pushes right through to 45.50 to 55, 56 or so. That 45.50 level. Maybe there we pause and then finish this move off, on Tuesday. Or maybe we're going to come out of the gate, make a new all-time high, and then fizzle out on Monday. If we were to go that route, we would know we're fizzling out if we make a new all-time high and then trade back under Friday's close, because Friday's close is our all-time closing high. And we always know we get into trouble on the day when we make a new all-time high and then fade back under that previous all-time closing high, because then we've got to fight to get back above it. And if that's the case, that probably represents a good line in the sand to try a short at. That would be like your highest point for which to try one at. People who consistently try to short into the highs are the reason why we keep shooting higher and higher. So you try to remember that this is this would be a good level to give you an opening into trying out a short. Would be to trade up to a new all-time high and then lose Friday's close at 45.09. Also, just below that is that 45.07. That 20% mark that I just showed you on the simplified daily chart, that as well, maybe losing that would show us that that would really like start getting the shorts to like press the bets a little bit here. When we come down, if we do start to pull back, we want to see 4,500 hold and see our 80 handle rule hold. At 45.0171, that was our high. That was our high on the week on Wednesday before we sold off a little on Thursday, and then came in and took that out on Friday. That kind of like represents a good line in the sand for us. If we can't hold above that 45.01, you want to stay short. We're looking for the move all the way back to 44.80. And what's around 44.80? The halfway back on last week's range. It's just all wrapping up in a nice, neat package here for us. If 44.80 doesn't hold, we're probably going to gravitate all the way back here to 44.50. But we have a little gap to fill here at 44.70. Maybe that would hold and reverse. We have our 10-day simple moving average. I'm sorry that like labels come in. We have our 10-day simple moving average coming up. It's going to be right in here around the 44.60s on Monday. It went out at 44.61. It's going to be higher on Monday. But if we sell off towards it, it'll flatten out and probably be right back here to where it was on Friday's close. So, and obviously if we lose 44.80, we're looking for our 80 handle rule level at 44.60. If the 10-day goes, then we're going to roll on back to 44.50, test the low of last week's range, and our 20-day simple moving average is going to be right up in there as well to lend us support there and hold our 80 handle rule. Our 80 handle rule plays out to where 44.50 fails. We've got a little gap to fill here. Maybe we would reverse and hold this gap open and turn from there, but ultimately we're probably going to be moving all the way back down to 4,400 by way of 4,400. If we lose 44.50, our 80 handle rule tells us that we have a potential for falling 50 points from there. Testing the lower 4,400s. This is the area where we closed on the 19th and opened on the 20th. That was a Thursday and a Friday from 2 weeks ago. And our 50-day simple moving average is moving up. It's going to be around 43.80 on Monday and a little higher into the 43.80s on Tuesday. That's going to be your 43.80 mark. So if we are going to really play out the 80 handle rule upon loss of 4,500, upon loss of 44.80, upon loss of 44.50, upon loss of 4,400, maybe we're going to wind up back here at the 50-day around 43.80. If that's the case, this target might not even be enough. We might be heading a lot higher than this 45.64 level. But that put the cart before the horse. Let's just cross that bridge if and when we get there, because we could come out of the week and just grind our way up here to 45.64, hit our target, and then pull back down here to the 50-day. That would be a lot nicer and neater of a setup. But, we don't get what we want. We get what the market has planned or what the market wants. Okay, that's it. Let's take a look at the options real quick. As posted on Friday, I used this little tiny pullback here into the end of the day to get into some 45.25 calls, Friday expiration, because I had been like stalking those all day long. So here I am. Those came back down to the $11 window after shooting up through from the $8 window through the $11 window and up to about $15 or so at the high of the day on Friday. And then they came back down and they were kind of gravitating around $13 or so most of the day. I almost got into these. I almost gave up and bought the 45.30s, but I pressed my willpower and I got my little pullback at the end of the day, and I got my 45.25 calls in the $11 window just as I wanted them. And of course, I think that this move at the end of the day on Friday was just about closing underneath 45.10. I think that's all that was about, because futures did turn and move right back up as soon as the bell rang. And I think that nobody wanted, that move happened on futures because nobody wants to be short as China and Europe digest the things that Powell said, the things that kept the market rallying and sustained this move all day long on Friday. Of course, you're going to get that digested by the Asian markets and by the European markets. So I think it's going to lead to a gap up open and go on Monday, and I think we're going to, go and move a lot closer to our 45.64 target. Maybe we're going to get to that target before Tuesday afternoon, and then we'll see the profit taking kick in ahead of all that data that's coming out Wednesday night. I'm sorry, Tuesday night and Wednesday morning, and overnight into Wednesday morning. We do have this extra expiration this week on the 31st, the end of month expiration. That's a Tuesday. If you are that person that insists upon using a shorter dated expiration than the Friday, this would probably be a good choice for you. The volume was pretty high here in the 4,500s, and of course the 44.75s on the puts. And then over on the call side, you've got your 45.25s. Also had some good volume here, but you want to make sure that these grab onto the $5 window and hold it. Also have your 45.10s. Those have got to either gravitate back to $8 or move up to $11 and hold, because right now they were in between windows. They went out at the 10s on Friday. Okay, that's it. I don't want to drag this video on for too long. Have a great rest of your Sunday. As always, good luck and good trading.